You are not in Texas, even if you were not affected by this storm that ravaged much of the Atlantic East Coast. The fact of the matter is prices were going up commensurately here, whether you're looking at oil, home heating oil, gasoline, nat gas. There was one day earlier this week where nat gas prices alone in one day jumped 8%. Now, there were other factors at play here, but this goes way beyond just, weather-related or energy-related commodities. A host of them have been soaring of late, and it occurs at a time when inflation is being raised again as a legitimate threat to this economic recovery if it goes too far, too fast. It has moved very far, and it has moved very fast. How big a worry should this be? We got Dan Gelb with us, the CPA market analyst. We've got Rebecca Walser of Walser Wealth Management, and last but not least, Aaron Gibbs Wealth Management. So, Aaron, begin with you on how real this inflation threat could be. In other words, it's not just gas, home heating oil, natural gas. It's a whole lot of stuff moving up.
For the most part, though, it's been within materials and particularly with construction. So this migration into the suburbs has caused a lot of those prices to increase. But the real thing that indicates inflation is the bond market. And that's what we've been noticing is that a lot of the bond yields have been going up. But when you look at Treasury inflation protected securities, TIPS, those are the best indicators about what type of inflation we're expecting. On the short term, we are expecting maybe 2.5% inflation over the next year, which comes with a recovery when you're expecting 5% GDP growth. But this is still a very healthy number. We're not seeing extreme numbers. It just feels very big because we're coming off of such lows and having almost zero interest rates. So I don't see it as a massive concern. It's only, in fact, if you look at these TIPS, they're only slightly above the Federal Reserve's target. And so we're not seeing really any massive run or massive increase. It's really still within a healthy or normal environment that we would hope for.
There might be some to that. We're coming off very, very low levels, and so any uptick obviously feels impactful. But Dan, lumber stood out to me when prices jumped over $1,000. And I know there's shortages of that, but a lot of home contracts were canceled because the affordability of the home forced buyers out unless they came up with more money. Now, I only mention that because housing starts were directly affected. The opening start, if you will, to housing construction. I'm wondering how serious this problem could get.
Well, it could get serious, Neil. And I think if you look at what the policies are right now, or the policies we're going towards right now in Washington, I think it's starting to set a situation where it could happen. First, the push on the minimum wage. Maybe that's stalled a little bit, but still, rising costs for employees, not good for inflation. We're seeing closing down of pipelines, the hovering of the Green New Deal, the way we're printing money, more stimulus, interest rates being low. All these factors are looming out there. I agree with Aaron. We're manageable right now. 2% or so is baked into what investors are expecting. I think we could easily hit 3%. And if we hit 4%, Neil, in the inflation, I think that's where it gets a little hard to stop. And once inflation gets started, not so easy to stop. For example, you have restaurants that have been putting surcharges on related to the pandemic. Are they going to roll those back post-pandemic? I think some of these rising costs are going to stick around for a while.
Rebecca, what are your thoughts on whether the weather does have a lasting impact? Because these storms were following one after the other, and obviously that shuts down plants. All the major automakers in the region had to shut down their facilities. Samsung shut down a chip-making plant. I think it is still closed, by the way. So that it's not just like a hurricane. It comes in, comes out, and then the people try to get back. This is sort of like a rolling stoppage. I'm just wondering, is that going to come up and be an issue in our economic recovery?
Well, pardon the pun, Neil, but I'm going to tell you that I think this is the perfect storm, because I agree with Dan's point. The administration, the new administration's policies, combined with the entire country except Florida under snow, which is just outrageous in and of itself. You have to go back. I mean, when has this happened before? I can't even think of a time. So the point is that we got to see a couple of things. We are not so energy independent. We have pipelines shutting down, but then we have Texas shut down, and their green energy policies, which are commendable, show that when you have an irregular weather event, it's not going to be enough. So this is a perfect storm, Neil, and it's revealing a lot.
All right, we'll explore this in a little bit more detail in the next hour, guys. I want to thank you very, very much. In the meantime, we are also focused on stimulus.